Hey guys, welcome back to the channel. So today I'm going to talk about a couple of memory stocks. I teased the idea last week. I was not able to make the video last week, but today I'm going to talk about these companies that I really like. These are two memory companies that are not your commodity based companies, but they actually sell solutions that are higher up the stack, or due to the business, the way it's set up, it will command a higher premium and be like it has a certainty of cash flows when you compare them with NAND manufacturers or DRAM manufacturers. Those companies will probably suffer pretty badly, when the tide runs out. So the risk reward is not that great. But with these companies, you can go play multiple thematics, and also like it's not just concentrated with memory. Memory is a big part of their businesses, but the way we're going to play it, it's going to help us, let us kind of like play the wider, larger AI infrastructure, and if there's no headline risk when it comes to the memory trade itself. So if you don't follow me on X, I would highly recommend following me on X, I guess, because I do share a lot of ideas on a day-to-day basis on here, and sometimes I'm not able to make longer form content. I'll leave the X link in the description, so please go ahead and give me a follow if you think that it's worth it. So yeah, let's talk about the first company. So before we talk about these companies, it's very important to understand what memory wall is and what is the reason why we are here. If you already know what the memory wall is, you can go ahead and skip this part and go right to the stock. But if you are trying to kind of understand what is the reason why this memory trade even exists, then you can stay. Or if you know, you might be able to kind of look at it in a layman's perspective or some other perspective that you haven't thought of. So yeah, let's just get into it. So first of all, I know this graphic probably looks super super overwhelming, but we'll try to break it down, and I'm sure once the slide is done, it will make sense to you guys. So first of all, let's understand what the KV cache bottleneck is, because I think that's the most important reason, especially with the inferencing workloads that are now starting to kind of take shape. The memory wall really exists, so let's just talk about how KV cache works and what is the reason for the memory bottleneck in the first place, and how it's becoming worse and worse with the CPU to GPU ratio getting worse and worse. So KV cache is basically once you open an instance of a chat with OpenAI, and if you've kind of done if you've had long chats, running chats that you've had with your LLM about a certain topic for a long period of time, you'll see what happens is there'll be a time after a certain time where the model starts to hallucinate. So if you look at it, an example of writing a book, so say a writer is writing a book, right? When it has 10 pages, the model has less things to look through. So that's why when you ask a question to it, it's going to be able to go through the 10 questions, right? So as you keep on asking more questions, if you keep on going through more books, if you keep on writing more questions and stuff like that, the KV cache, your instance of this window. So the KV cache is nothing but if you have a window going on, if you have a specific chat going on, the memory that's dedicated to that specific chat is what KV cache is. So when you keep on asking more questions, that KV cache memory just starts to go up higher and higher and higher. And as we know, there's a limit to how much memory that can be stored within a GPU, right? So with HBM, say this is a GPU, there's an HBM attached to this high bandwidth memory module that's attached to this specific GPU. Once you start asking questions, the memory is going to fill up, and then what is going to happen is it's going to start spilling over some of the content outside. So if you ask questions, once the context window starts to get larger and larger, your output results that the GPU is going to produce is going to be smaller and smaller, because some of the tokens that are attached to this GPU HBM are going to start to fall off from this GPU. So it's going to have no recollection of those questions that you've asked. And the other thing is also, if you if there is still space, but the memory pool itself has gotten pretty long, the GPU has to go through all of this information to be able to spit an answer out for you, right? So that's one of the reasons why you'll see when you start hitting very long chats, if you have one chat going on for significant amount of days, it's going to lead to the GPU not going to be able to respond to your requests itself, right? So this is what leads to the memory wall. When you ask more and more questions, the KV cache starts to explode, and then what happens is some of these things that you want to ask, they don't fit in the memory itself, and you only have a few some of the information that you had started to talk to the GPU or your AI about is only that's left, and whatever is left over is just going to get spilled over and it's completely lost. So this was a huge problem for the memory wall itself, and you're not able to get answers and stuff. So if you take this information where you have like just one person asking questions about a certain thing, if you get to agentic workloads, which we talked about in a video, I'll link it right now. You can you can watch that video that we talked about, like 10 stocks that I want to buy in 2026, and so far they performed really well. But like we talked about how these things kind of interact with each other, and how with agentic workloads there's not only a single task, but there's like 10 tasks. So if you have 10 users running a certain task, then you can see how this HPM memory wall is going to get even worse, because if you have like 10 users kind of prompting the same AI over and over again, this is going to lead to the HPM getting super congested, and the KV cache getting super congested, and some of the stuff and some of the information falling off. So if you have like 10 or 20 or 30, 40, 50 pages or 100 pages that you're feeding your your chatbot, it's going to be able to respond. But what happens when you take this and extrapolate it over 10 people, and you have like thousands of pages, right? If you're writing a book, if you're going through a book, if you keep on adding pages to it, right, once you get to the 200th page, like the chatbot needs to read the last 200 pages to help you with the 201 pages or 201th page. And then when you keep on going forward, right, that amount of content that the AI has to go through is going to increase more and more and more, and that's going to lead to this information kind of spilling over and not being there when you need it. So that is basically the memory wall, that you're trying to like people are trying to feed it a lot of information, but that information is just kind of like falling on deaf ears, because the system cannot really hold that much data, and that has been the reason behind the memory trade being how big it has been, because HBM gets attached to every GPU. So every GPU that gets sold has an HBM attached to it. And the more and more chips that are selling, the more and more DRAM, the more and more NAND, the more and more memory that you need. So that is the main reason why the memory demand has gone up so much. So now let's talk about a company that let's talk about the CXL solution that Penguin solution builds. So basically what CXL does is it pools the memory. So think about this, like, so in a data center, you have like multiple GPUs. One GPU is performing like a huge task, right? Like it's filled out, it's over 100% capacity. So what's happening is it's kind of slowed down, and meanwhile you have all these GPUs where like there's enough data that is, or data enough memory that's that's available. So what you're technically doing is you are leaving all these GPUs stranded. They're still consuming the electricity. I think actually Microsoft mentioned that 25% of the GPUs don't have are sit idle all the time. So idle capacity is possibly the worst thing that can happen when you're spending millions of dollars, potentially billions of dollars on your infrastructure, and then you have all these GPUs that are sitting idle. Because what's happening is, if this specific GPU is running a huge workload, right, it's operating at 100%, and these ones are operating at say like 30%, this one's operating at 20%. So there's all these GPUs that are kind of lying idle, that are not doing anything. This one say is at 10%, right? So what CXL does is, CXL is a module that Penguin Solutions makes. They're one of the producers that makes it, and then all these GPUs can use this extra memory. So there's two ways CXL comes in here. So say like I think it's 288 GB of RAM that each GPU has, right? So what will happen is, say like this one 288 GB, sorry, this is terrible writing, but 288 GB gets consumed 100%. It needs more memory to complete the task. Meanwhile, this one is sitting at 100 GB, so it has a massive amount of unused capacity. So what's going to happen is, you can actually pool this extra storage with the CXL, and whatever is kind of overused, overworked sort of a thing, it can optimize this one GPU that's being kind of overexerted, and use that extra space all across all these other GPUs. So that'll allow you to pull the memory pool the memory together, and kind of lead to no idle time. Because if you're maxing out two GPUs, but if you're not maximizing the other two GPUs, then you're actually like losing the potential to like generate revenue, right? So you want all the GPUs to be running at full strength, instead of some operating, the other not operating. So this is what CXL basically does. And the other thing that CXL does is CXL adds extra memory to your server architecture. So like say this is 288 GB, right? All these 288 GB, you get to around what 1420 GB or something, 1440 GB or something like that in total. You can 1.4 terabyte almost. So what you can do is the Penguin CXL solution is 11 terabytes. So then what happens is it just fits cheaper DRAM modules, because this is all HBM, right? HBM is much more expensive and DRAM is a little bit cheaper. So then the Penguin solution will have 11 terabytes of extra DRAM that once say like these GPUs get maxed out, they can use this CXL module to like overflow some of their memory or storage inside the CXL server and then use that information. And this is specifically important when you have like user 1, user 2, each with their GPU say, and just using working on on the same task, right? And one of them is maximizing it, the other one is not maximizing it. Like you can multiply this across 100. So then the CXL pool could become really important because you have all the same tasks, all the same project that you're running with like tens or 20 or 30 or 40 engineers that are kind of maximizing the GPU utilization. Your context window is running longer, and you're running into the memory wall where it's just dropping out very important information, very important inputs that have been created during that agentic process that are otherwise going to get wasted. So that's where the CXL switch comes in. Everything that's additional can get pulled into the CXL solution, and that information can be used by all the all the GPUs, and also like that way your GPU is still running. It's not getting completely bogged down here. So this is a huge reason why the CXL solution is becoming so important, and there's a chance that this actually ends up being one of the more important things in the whole infrastructure, because the thing is like you won't have enough memory even that you need by until like 27, 28. And even if the prices come down, the prices will still be historically like higher than what they have been historically, right? So if there is way to optimize that, if there is way to optimize your cost savings, you're definitely going to do that. So that's the biggest thing why Penguin Solutions has been benefiting from this situation. And I think that's the reason why they will continue to benefit. And the other thing is also that the SK Hynix is a huge investor in Penguin Solutions. They recently bought shares at $62 a share, and their stock is trading at $65. So they are in a really good position to like secure the supply if need be. So that's the other thing that is really working in their favor. Now you might say that, well, like what else is in this company, right? Like why would you say that this is well diversified? Why shouldn't I just buy someone who actually makes these DRAM just DRAM modules? So the reason why I like them so much is because they're not only a memory company, they have other ways to win as well. So as we just talked about, these are some stats that they had shared based on how their solution has worked out in data centers. So up to 2x higher inference performance, up to 8x lower time to first token latency, and 4 to 5x more cost effective than GPU HBM. So this is a huge reason why they are kind of winning business, and now they're actually winning business within large data centers as well. So, and each module is $500,000. So that's a big reason why their revenue has kind of exploded. So beyond this is not only the way they win. The other reason why they are such an important company, and I feel like are undervalued, is because of the software portion. So they have this software called ClusterWareAI. So they're agnostic to what hardware wins. So basically, say like I am ABC Enterprises. I have like 30,000 employees. I'm using my cloud services to be able to run my AI workloads for my company, and it's becoming like increasingly expensive. Plus, if all your information is on the cloud, there's a chance that it gets stolen, it gets leaked. You might lead to it might lead to like you getting hacked and stuff like that. So this causes a lot of issues where you're not able to like have all your data on the cloud. And if 10,000 or 20,000 employees are using the cloud, it's going to get really, really expensive. So a lot of people, what they're doing is they're moving on-prem. On-prem is meaning like, say like, so you have you have company ABC, and then you have a huge data center from Google. So if all your information is being, tracked on the cloud, it's getting super expensive. So you're like, okay, well, I don't want to run everything on the cloud because it's becoming extremely expensive. So might as well open my own, have my own on-prem on the location, small little data center. So what people are doing is people are just like making space on their own infrastructure, and they're like adding like GPUs and using like open weighted models because they're cheaper, right? If you don't need like Anthropic or the likes of ChatGPT for everything because those tokens are expensive. So you can use those here still on the cloud, but then you can do like your cheaper version of things that you want to do on-prem. So that's another thing that Penguin Solutions does. They also help with companies set up their own small data centers on-prem on location. So the reason why I feel like they are well suited is because of their software called ClusterWareAI. So they like someone can have in like some other contractor come in and like just hire them to install the racks. You can get memory from someone else, you can get your servers from Dell, you can do all these things, but then at the end of the day you need someone to put that all together. So what ClusterWareAI does is it says hardware agnostic OS software that unifies GPUs, CPUs, memories, and networking into a single cluster to accelerate time to first token. So they are agnostic to which hardware wins. They can literally go on a location and get everything set up for the user. They can have the memory. They can kind of combine everything together. And ClusterWare oversees the entire ecosystem and optimizes the connectivity between these various different solutions, like from say like you get the GPU from Nvidia, you get the CPU from AMD, like things like that. So how are you going to combine it to make sure that they're operating properly and they're the operators are maximizing their usage? That's where ClusterWareAI comes in. So they don't even need to resell the racks themselves. They can actually benefit from ClusterWare AI as well. So this is where Penguin Solutions is different to most other companies within this stack, where they're not really selling you the racks. They're not just like buying and like reselling the racks, hiring subcontractors to do the on-site combination of all these other various different services. They're actually they sell the KV cache server, which again one might say, well, there's so much competition and there's no real moat to it. Anybody can make a CXL server. Yes, granted, but not everybody else can do the entire optimization of your on-prem solutions by themselves. And that's where Penguin comes in. They can do everything for the user. And once they're hired, and if someone needs the memory server, again, memory has been one of the main reasons why the stock has gone up so much. So they're probably going to go buy the memory AI server from Penguin as well. And the other thing is there's not enough demand. So the other companies that are making these CXL servers, they don't have enough of the materials that are required to make these, right? And due to Penguin's strategic partnership with SK Hynix, they have a huge advantage in this market, and due to that they're able to sell the entire solution and also price it better because they don't have to like just be able to like sell a couple components and buy some other components from somewhere else. They're partnered with Dell, they're partnered with Nvidia, they're partnered with SK Hynix, they're partnered like all up and down the stack. And this current CEO actually worked for the HPC segment. He was the leader of the HPC segment on the Dell side, so he has really good what do you call them, connections over there, and he was successful in that market as well. So that's why I feel like this company is sort of undervalued, and I think there's a lot of growth that is about to happen for this company still, which we will talk about right now. So this is the outlook, and then so let's look at the operating results, and I think that's one of the reasons why I feel like we're going to have a next little jump here in revenue. So as you can see, the integrated memory business has grown so well. And then if you look at the YOY comparison, it's up almost over 100%, right? So advanced computing, they were I think in the data center business with Meta, which they have wound down. And last quarter the comps were pretty like bad. The advanced computing revenue was down quarter on quarter, but this quarter was the first quarter in a while where this revenue has now inflected positive YOY. And they also mentioned that a lot of their deals are in the pipeline, and 3 to 6 months it'll take for them to get these deals through. So most likely after the fourth quarter, which will be reported soon, they will have a significant increase in revenue on the advanced computing side and on the integrated memory side in Q1 and Q2. And I do believe that with the comms getting easier, we'll probably see another surge once those results are reported. So let's just talk about the outlook real quick and the valuation to see how cheap or expensive the stock is. So if you look at their outlook, they increased their guide from 22% they increased the guide to 22% YOY, and they are also expecting 30% growth YOY preliminary. I think that's probably going to be enhanced higher in the next earnings call. So in the previous earnings call, they mentioned that as per what we know right now, we expect 30% growth on the EPS and bottom line for 2027. So if you look at the operating expenses as well, like there's a tremendous amount of operating leverage in this company. The previous GAAP outlook was $1.97 for the full year, and they've actually raised it to $2.60, and we are in Q3. So there's another quarter coming up. Most likely they'll report around 280 is my estimation. There's a chance that comes in higher than that. So 280 is what I'm expecting, and then if you add a 30% to that, you get to I think around $3.5. But I think there's a very very high likelihood that they report $4 in earnings next year. So if you buy this at right now, I think it's probably going to be higher than 4% even. But if you buy this right now, $4, sorry, if you buy this right now, you're just paying 15 times earnings, and it's not only your rack integrator. So you can say, oh, 15 times earnings seems reasonable, but the thing is here they're selling CXL. It's not just just memory modules that they're reselling. They actually have a CXL server solution. Also, the advanced HPC business that has a very strong pipeline and has way better margins. So that's also something that will continue to really be an inflection point for them going forward. And the other thing I'll also say is there's something they're kind of developing something with the company called Celestial AI, which was recently acquired by Marvell, and the photonics memory product that they're working on could also be a massive value unlock for this stock if the memory bottleneck remains where it is. That could lead to a huge just multiple expansion as well just for this company, because there's only one or two thematically relevant companies that do that. Marvell is like much larger company, so photonic memory is going to be a very small portion of their revenue. But the second memory stock that I want to talk to you guys about is Netlist. So I tweeted this out on the morning of August 5th, 2026. This is a couple of weeks ago, or actually 11 days ago, when this news came out about Netlist that morning, and I had tweeted that it doesn't make sense that the stock is not up much more, because this deal was like, it's a huge deal, and we'll talk about various scenarios for what we think the valuation should be and where the stock could end up. So since this tweet, the stock is already up like 70% in like 10 days. So this kind of I lucked out with this one. That's why I say, like, if you want to follow me on X, there's sometimes the opportunities like these which kind of show up. And it's at a big resistance here. It has reached the third deviation levels for this year, and there's a historic resistance which goes back 3.5 years. And there's like a touch over here as well. So I do expect that this could be a little bit of a short-term high, unless there's a news that we'll be talking about in this video comes out. Then we can potentially have a higher move. But there's a chance that we've kind of go sideways for a little bit before we go higher. But yeah, this is a company that I think that could be a multi bagger from here on as well. So basically, this is a company that has had patents to a bunch of technologies for the things that are being used in the memory market right now. Your DRAMs, your MRDMs, your HBM, and things like that. So and they've been fighting with the memory makers for the longest time. With SK Hynix, they already had a deal, and SK Hynix has been one of the reasons why they've even survived so far. So the SK Hynix deal is also up for renewal, and that was the other factor that I kind of thought that would lead to potentially a higher upside. So right now, with the deal that they signed with Samsung, this is the pro forma income statement that I'm kind of looking at. So if you look at the base product sales, this is what they have historically. They're doing right around $100 million per quarter right now. And then if Samsung product sales go through, so they've basically gotten a deal with Samsung that Samsung will provide up to $300 million of memory products annually. So this will be additional revenue that they will be able to generate once this deal kind of ramps up, which will take 3 to 4 months potentially. So basically Q1 next year, they should have this deal kind of ramping up. Samsung will pay a licensing fee as well, which is going to be around $32 million per quarter, and that kind of works out to $131 million. And then you have the SK Hynix deal, which is currently going on. So this is assuming basically that the SK Hynix deal gets renewed at the same level it was in 2021. I don't think so, and we'll talk about why and how this could potentially play out. And then, so in that case, the total revenue will be 840 million. You look up, I think the gross margins actually go up because they're actually making their own CXL solutions, their own MRDM solutions. I think the revenue has reached about, I think, $40 million run rate for the products that they're reselling, I guess, and making them more efficient. Just not just, right now they're just like a lot of the revenue is just coming from reselling DRAM or reselling NAND, but now they're kind of like using their own technology to make products, getting some design wins. So that'll lead to higher gross margins as well. So let's say like 30% gross margins, that gets you to $350 million in gross profit, and blended will be 41 because licensing revenue shouldn't have any cost of goods sales, goods sold, right? And for operating expenses, I'm assuming about $30 million of operating expenses going forward. That gets us to a pro forma net income of about $180 million. And if you put a 15 times multiple on this revenue, you get a projected market cap of 2.7 million. The market cap currently is around 2 billion, so you get about 36% upside. Now, this valuation completely changes if you change the multiple, and I could see someone wanting a higher multiple because most of the IP licensing companies, like some trade at almost 40-50x as well. So you can potentially say that this deal alone is worth almost $4 to $5 billion in market cap. But I am choosing a conservative number just given the history, given the industry. You never know, because they also had a deal with Samsung before, which expired in 2020, I believe, and they never renewed it. So you never know, what can happen in this market itself. If the tide runs out for DRAM, what happens, right? So even with what we have right now, this still allows about 36% upside. Now, this is why I was saying that these companies have better upside to downside risk reward as compared to your traditional DRAM makers. Because if the tide runs out for those companies, it's probably over. There's so much downside. But for these companies, they have guaranteed licensing revenue. So even if the tide runs out, they'll probably have much better risk reward ratio. So the second deal, we're just assuming if SK Hynix deal gets renewed as well, what happens then? So that completely changes the landscape. If SK Hynix deal happens at a higher rate, right now, as I said, it's about 40 million. But if they actually end up paying, 40 million for 5 years is what it is at right now. But what if they actually ends up being, like 300 million? And that's a very high very likely scenario as well. In that case, you're looking at a total upside of 117%. Again, with only a 15x multiple, one can make an argument that if that deal goes through, the target multiple should actually go up as well, and that should actually lead to $6 billion market cap, which means 200% upside right here, right? 3x from here. And then there's a Micron case going on as well. So they had a deal when they had a deal with ITC come out, with the Samsung come out. There was a clause in the agreement that Samsung will help Netlist figure out ways and find out what happened with all the documentation, what happened with the export controls and stuff like that. So Micron should be they actually filed another case against Micron, and they basically said that Micron is also at this case has been going on forever, but there's a likelihood after this action where Samsung is helping Netlist, fight this battle, that Micron actually caves in as well. And if Micron caves in, the licensing revenue will be higher. The company will get almost $400 million of extra cash from this deal, right? So that deal could be like a landmark deal, and the pro forma net income probably goes up to like almost $400 million. And then if you take a 20x multiple, that gets you to an $8 billion market cap plus all the cash they'll have. But we won't even consider that for the sake of this argument. So you look at that, and you're saying like a 4x from here, right? 300% upside. Or in this case that we took a 15x multiple, you're looking at 220% upside. So there is still upside here. The only reason that I would not be buying right now is, as I said, technically this is not the best place to add. If that news happens, you never know. You might get like a huge spike into the $8 level, which is also a big significant resistance. I had about 4,000 shares, which I sold about 30% of my position. So I still have about 2,800, I think, to 3,000 shares. So still a decent position, like nothing like insane by any means. But I do really like the risk reward on this position as well. Again, as I said, there is higher likelihood of this working out for me than, kind of like taking the headline risk or taking the risk with, Micron or, companies like that. I do believe though NAND is better positioned than DRAM. And that's one of the reasons why I have a significant position in disk, which is predominantly NAND, and disk has reclaimed its VWAP since it's been listed. So this is a pretty nice looking chart as well, which we can actually see this stock kind of going up because Kioxia too, like Kioxia, I think is how they pronounce it. The NAND manufacturer out of Japan, they're super cheap, and with specifically with how much attention SanDisk is getting, there's a good chance that Kioxia starts to kind of go higher as well. So that's what I would say. I think the memory trade is. I would say like the traditional companies are probably higher risk compared to the two trades that I'm telling you about. But if the trade itself goes away, then obviously everybody will suffer, right? Because they've run up so much, and a lot of the owners of this company, be their institutions, be it individual investors, are very skeptical of how big the demand is and how much of a runway we have, right? And there's a lot of like bad takes. So there's a lot of headline risk where like someone will come out and say this new solution has been introduced, or this has been introduced, or that has been introduced. That is kind of causing a lot of FUD in this segment as well. So that's the other thing that I will also mention, that you should be pretty careful with that. The challenge account, I didn't do much this week. I had a couple of pretty bad decisions that I made, a couple of good decisions that I made. The account is pretty much flat from last week. If I hadn't made those mistakes, you can watch the video. I'll just link it here as well. Most likely won't make a video next week as I'm gone for something that I have to do. But yeah, like I don't want to make I didn't want to make a video because I didn't really have anything to share there, and I didn't get a chance to look at all the charts either because as I said, I just have a couple things that I could take care of. But I will most likely make that video next week. I wanted to do something because just want to remain consistent making the videos. So yeah, please follow me on X if you do like my content, and please subscribe as well. It'll be I'm never gonna ask anything from you guys. Just to subscribe would be super helpful. Thanks so much, guys. We'll see you in the next one. Take care. Bye.